Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. Well, I'm so excited, of course, to welcome you to yet another promising edition on the Extreme Speed Live. Well, as usual, before we kickstart the session, let's run through our daily routine just to quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please kindly give me a feedback in the comment section by typing in hi. So your highs will give me a positive feedback that we are all good to go, and if there are any issues, please let me know accordingly. Thank you very much as you do so while I load up my comment box. Okay, I can see a handful of comments here from Piskozodi, Blue 80, Shazi, Sahid, Hamas, and Amma36. Thank you very, very much. I really appreciate these feedbacks. And I think on this note, we are very much good to go. So on this note, I welcome us all again to another promising edition of the Extreme Speed Live, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market together using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And we have a bunch of assets we've been monitoring since the beginning of the week: the US All Spot, the US Tech 100, USDJPY, and of course my favorite asset, the XAUUSD. Though things haven't really been rosy since the week began, as market structures has been a little bit choppy as a result of market participants in indecisive situation right now, as we look forward to what the timeline for the Fed interest rate cut is going to be for the year 2024. And right now, investors now appear to favor that the Fed's rate cut will start in the month of May, while geopolitical concerns remain unabated and global yields edge higher during the early sessions of today. Today I have simple trading setups, of course, as always, that we will be using to guide our decisions going forward. So I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, who are wondering what this is all about, well, to simply put, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's also important for you to note that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do in this community every morning, of course, is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiment today. And of course, these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. Now, so far this week, we really do not have a week list with series of high impactful events, as we only had a couple of them at the beginning of the week. That's the Fed Chairman's Powell speech, and of course the ISM Services PMI, which gave us a resounding figure, hereby emphasizing the resilient nature of the United States economic docket. Now, ever since then, we have been seeing speeches upon speeches from key Fed officials from the United States from Tuesday, Wednesday, and in fact today too as well. We are going to be witnessing another speech coming up later today, and one of the rhetorics that has been common amongst these Fed officials is the fact that interest rate is going to be left high for an extended period of time, and they also emphasize the high nature of the inflationary pressure in the United States, which of course has made market participants shift the expectation of any potential rate cut to the month of May. Now, for today, Thursday, February 8th, we are looking forward to the initial jobless claim count, which of course is a data released by the US Department of Labor, and it of course gives us an insight into the health of the labor sector in the United States. And this data here gives us a measure of the number of people filing first-time claims for state unemployment insurance, and usually a larger than expected number today will indicate weakness in the US labor sector, reflecting a negative impact on the United States economy. And of course, if the data comes in below expectations or below the previous data, it will be a resounding news that the economy is expanding. Now, with this information here, if we look at the previous data for the month of January, it came in at 224,000, and based on what is on ground, economists are projecting 220,000 for the month of February. Now, this projected figure is a little bit, just 4,000 lower than the previous data. So we shall look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? And one thing we do know here as technical traders is the fact that the anticipation of the event usually influence the sentiment in the market, which of course we shall see reflect on the chart as price action. So our duty today is to sniff through the chart and look out for patterns and structures that will help us guide our trading decisions for today. So stay tuned in as we dive right into the business. And as usual, the first asset we will be taking on this morning is going to be the USOILSPOT. And what an interesting situation we have here on the USOILSPOT, as we see price action has been a little bit choppy in the last 24 hours. I'm sorry for the break. I had to sort out some technical issues here just to avoid any disruption in the session. All right, so we are good to go. So, like I was saying earlier, the last 24 hours has been very, very choppy as we saw situations where I personally had some buy positions in the last 24 hours and, of course, sell positions as well. And the sell position we did take advantage of yesterday during the New York session did not do very well at all, as we saw price action take us out following the report we received from the EIA yesterday, bringing in some imbalance into the market. Well, the current situation going on, the ongoing surge in oil prices may persist, well, due to the emergence of an obstacle to a ceasefire in the Israel-Gaza conflict. Remember, I was talking about yesterday that there is a glimmer of hope that there is likely going to be a ceasefire due to the response from the Hamas group to the proposal from Qatar, Egypt, Israel, the United States, and I think one other country which I can remember right now. And we were hopeful that this may likely strike a balance that will result in an easing of this tension in the Middle East. However, the Israeli Prime Minister yesterday rejected Hamas ceasefire offer and the release of hostages in the Gaza Strip, which of course is supporting the ascent of oil prices. However, there is a clog in the wheel of this ascent, as we saw yesterday how the U.S. Energy Information Administration reported a crude oil stockpile at 5.521 million barrels, significantly surpassing both the expected 1.895 million barrels and, of course, the previous figure of the upper week, which was at 1.234 million barrels. Now, this is a sign that there is a high stockpile, and which means that the rate of supply is higher than the rate of demand. And when we have this kind of situation, it usually signals a drop in price, which of course has led to some selling pressure during yesterday's session, but unfortunately it didn't last long before the news of the rejection of the Israeli Prime Minister of the Hamas ceasefire offer. Now, the market reaction to this report amidst currently uncertainty remains uncertain and may potentially moderate the rise in oil prices. Now, given this situation, we need to exercise patience and analyze the structure from a technical standpoint and emphasize the significance of a pattern that we want to use to guide our decisions going forward. Now, for the sake of those who are not part of our earlier editions, I would like to revisit what has been going on in this market since the beginning of the week, as we've had a roller coasters of buys and sells through the course of the week before this particular moment. So at the beginning of the week, it was more of price action trading above our key level at the $72 area. Remember, this level is a strong area for buyers. It has a strong memory for buying power in the past. And one of the things we agreed is that if price remains above that key level, we want to be buying this asset. Now, another thing that also was one of the things we took into consideration was the fact that price action was trading above an ascending trend line, which we identified on the 4 hours time frame. And of course, we can see the tip of this ascending trend line reflect on our 1 hour time frame right here, which I am highlighting with the red color. Now, in addition to these two parameters on the structure, we did realize that price action during the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours of the week, price action was range bound, as we saw price confined within the $72.78 level and the $72.20 area, giving us an insight into the prevailing uncertainty in the market at that particular point in time. Now, with this situation in mind, you know how we do it in this community, especially when we have a range identified on our chart. We exercise patience and wait for either price action breaking out of the resistance line for buying opportunity or breaking down the support line of that range for selling opportunities. Now, with the situation we had here, we saw how price broke down both the support line and the ascending trend line at the beginning of the week, inciting a sell position prior to our live session. And I did mention on Monday that if we see price come back to retest structure, we will be good to add more sell position to our existing trade. And in fact, we saw price come back, retest the structure, and incited an engulfing bearish candle south before this bullish momentum came in. Price moved about 80-90 pips thereabout before the bullish momentum came in. And of course, you know how we do it. When price moves significantly well, we definitely move our stop losses and secure the current sell position. And after doing that, we were taken out with a reasonable small profit, or worst case scenario break even if you had moved your stop loss to break even. Now, in alignment with our expectations on Monday is that if price goes ahead to break out of the resistance line, we will be buying the asset. And of course we did, as we had our first buy position for the week triggered at the breakout of the $72.78 level. And since that moment, price action has been trading above the structure, where we were able to maximize the potential of this bullish move by adding more positions, had a breakout of the $73.27 level, and of course the $73.65 area. And as at yesterday live session, I did emphasize that we move all our stop losses on those buy positions to secure the current position, as we may likely see a bearish momentum happen. And one of the things that we were suggesting that could incite a bearish momentum was the fact that the Hamas group accepted the proposal from these four nations. And of course, we were expecting that if that happens, then there is a likelihood of a ceasefire. And if the ceasefire happens, then this will dovetail to less concerns about oil disruption. And if that happens, price of oil will drop. And technically, from the 1 hour time frame chart, we were able to spot a downtrend continuation pattern in the form of a pennant, as you will see right here. And one of our discussions here yesterday is that we shall only look out for certain opportunities if price breaks down the support line of that pennant. And we did mark out the $73.65 area as a confluence to look out for selling opportunities if price drops to the downside. And look at what happened here. We had price drop that confluence to the downside, triggered our sell position, but unfortunately for us, the sell position did not do very well, as we saw price climb back up to hit the stop loss at that particular point in time. And since that moment, we have seen price action be consolidating, further emphasizing the uncertainty in the market, as you will see that in the last 24 hours, price action has been ranging between the $74.32 level and the $73.65 area. As at this morning, I had a sell position triggered below the $74 area after considering that price has broken down the support line of that pennant structure we identified here yesterday. But it appears that buyers are gaining momentum again, trying to shake me out of my current position. But we shall exercise patience at this juncture to see how we will be managing our position. But one thing I would like to let you know here is that before we can actually fathom what is going on here, let's look at the higher time frame to have an holistic perspective into what has been going on in this particular market. And on the daily time frame, if you look at the structure closely, after considering the nature of price action since the month of September of last year, we did realize that this market has been on a strong bearish momentum. And in fact, we had a couple of descending trend lines to emphasize this fact. We have this one right here, which is the one we are using for this week. And of course, we added another one which captured the the lower high that happened last week's trading session right here, but that is not relevant to us at this particular point in time, so I will only be highlighting this one. Now, in addition to the fact that price action has been bearish, there is one interesting thing that happened since the beginning of the month of December. So despite the series of lower highs and lower lows, we saw here that as soon as price got into that zone between the $68 area and the $72 zone, we saw how it became difficult for sellers to break through this particular zone, hereby emphasizing a strength in the buyers. Now, this situation persisted into the early days of the year, leading to the breakout of this descending trend line, which happens to be the first time price will be breaking out of that descending trend line in the last 4 to 5 months. And usually, from a technical standpoint, when price action breaks out of a trend line like this, we expect that price may at some point in time come back to retest the trend line, the structure, to incite another wave of bullish momentum. Now, with this in mind, as we saw last week Friday, as soon as price got into the trend line, we saw some signs of buy pressure resume around that point. And to make our trading decisions easy to capitalize on for this week, we were able to mark out a key level just right around the $72 area to guide our trading decisions for this week. And you know how we use our key level. As long as price remains above our key level, we definitely want to be looking out for patterns and structures that support the idea of buying that particular asset. Now, with the situation we had here and with the information we have gathered on the daily time frame, the $72 area was our center of focus at the beginning of the week. And to make a decision, we decided to look at how market participants have been reacting to that key level since the beginning of the week, right on the 1 hour time frame. But before we went into the 1 hour time frame, we did acknowledge this ascending trend line here after capturing the nature of price action in the last couple of weeks. Then we saw some pivot lows here. We connected it, giving us this beautiful ascending trend line. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying. And look at how beautifully the ascending trend line shared a confluence with our key level, which further emphasized the idea of looking out for buying opportunity at this juncture. So with all this information, we scaled down into the 1 hour time frame, which gave us the privilege of joining that bullish momentum. Now, as it is right now, you will see that the last 24 hours has revealed how uncertain this market is, and I'm of the opinion that market participants may want to be looking out for more fresh impetus to give us clues on what to do next. So we have a speech later coming up today, and of course we also have the CPI data coming up next week, which will also give us clues into the timeline of the Federal Reserve interest rate cut for the year 2024, which could also give some fresh impetus to this current market structure. But technically, if we look at what is going on here, since price action has been confined within a range, we have no other choice than to exercise patience at this juncture, waiting for price action to either break out of the resistant line of this range to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So at this point, though I told you earlier that I had a sell position triggered at the breakdown of the $74 area, which is currently running in a loss, but if it goes ahead to take me out and then break out of the $74.32 area, which happens to be the highest level for this week where price has gotten to, then we might be in for another wave of bullish momentum. However, if price drops below that $73.65 level that we identified yesterday, we might be getting ready to sell this particular asset. So our center of focus for today is between the $74.32 level and the $73.65 area, we are depending on the direction of the breakout, will give us an idea into where price is likely going for today. So I will encourage us all to mark out these levels on our chart, as we will be needing it as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, or you need some clarification, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq, where we have a good buy position currently running in profit at this particular point in time. Now, before I go into the details on that position, let's quickly run through what really has gone in this market, what really has happened in this market since the beginning of this week. Now, the first thing we noticed here is the fact that price action was trading below our key level at the 17,685 area. Remember, our key level is the highest level price action has been in a long time, as you will see right here. And of course, price was trading below that structure for a while, confined within a precise range between the 17,639 and the 17,575 area, where we were waiting for either the breakout or breakdown of that range to give us an opportunity to either buy or sell. Though we had some sell position move, but price came back into entry point, and we saw some buy position as well that did not do very well at all. We saw some sell move around this area, leading into a situation where price the range expanded into the 17,500 area, giving us a wider range to work with, and further emphasizing how indecisive the current market phase is. Now, during our live session yesterday, we were around the 15,575 level, where we were taken out of the sell position yesterday. Remember, this sell position was taken out in a loss yesterday, and I mentioned here that we will be using this ascending trend line to guide our trading decision, and that if price remains above this ascending trend line, in fact break above this ascending trend line, we will be buying the USTech100. And to position ourselves for this bullish opportunity, we did mark out this level right here at the $17,639 area, which happens to be the first resistance line for this week. Remember, so we positioned ourselves right above that structure to capitalize on that bullish move. And I did mention here yesterday that we will be adding more position if price goes ahead to break out of that high at the $17,685 area. And at this point, we have about 2 positions running in profit, where the first buy position is running with about 120 pips, while the second buy position is running with about 75 pips. So we have roughly 200 pips thereabout running at this particular point in time. And for those of us who did capitalize on this opportunity, well done and kudos to you for being on standby to capture this opportunity. Now, as it is right now, since price has moved significantly well, I do hope you've moved your stop losses accordingly to secure this current position. If you haven't, it is high time you did. And from the look of things, I'm of the opinion that while we try to give enough breathing space for price action to move around the 17,750 and the 17,725 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? What are our plans? How do we intend to capitalize on the next move? Are there any chance that buyers could continue the uptrend, or are we likely going to be seeing some profit taking activities today, which could reflect on the chart as price moving to retest the structure that was broken yesterday? And before I even go into the details here, we shall be scaling up into the higher time frame to have an holistic perspective into what is going on in this market. And I also want to emphasize here that price action is at a phenomenal high, and I did emphasize the psychological expectations around this kind of structure, where it usually takes some time for price to get used to the zone before it now continues the momentum to the upside. And I also emphasize that in this area, we're likely going to be seeing the emotion of fear become prevalent, as those who held onto a bullish momentum prior to price getting into the structure may, out of fear, want to be taking some profit off the chart, and this usually result into retracement move, choppy market situations, and of course consolidation phase. And this is what we have been seeing since the beginning of the week, as we saw how price expanded from the narrow range into that wider range between the 17,500 and the 17,685. Now, scaling up into the daily time frame, where we had a simple trading setup which we said we will be using to guide our decisions. Remember, we identified an ascending trend line after considering the nature of price action since the month of August last year, giving us this beautiful trend line. And as you will see, this trend line had played a major role in determining the direction of price action. At some point, it was serving as a selling niche. At some point, we saw price broke out of the trend line. And in recent times, I think in about 2 weeks thereabout, price action has been trading above that ascending trend line. Now, in addition to the fact that price was trading above the ascending trend line, we saw here that in the last couple of weeks, price action has been range bound, as we saw price confined within the 17,685 and the 17,150 level. And you know how we do it whenever we have a range identified on our chart like this. We usually exercise patience and wait for price to either break out of the resistance line to give us the opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. The last 1, 2, 3, 4, 5 has been showing signs that buyers are trying to knock through the ceiling of that 17,685, and I can remember telling that at some point the ceiling might cave in to incite an uptrend continuation pattern, which of course is what happened here yesterday, breaking out of that structure. Now, scaling down into the 4 hours time frame, remember we had a range here. So give me a moment, please. So we have a range here, and we have an ascending trend line around the structure, which I would like to connect right now, as we may be using this ascending trend line to guide our trading decisions going forward. So we have a couple of them. So let me now, I would like this to reflect on the lower time frame. So we have something like this. Now, as at yesterday, we saw how price broke out of that key level, had a 17,685. Now, the question here is, will price action come back to retest the structure in an attempt to continue the uptrend, which interestingly shares a confluence with that newly identified ascending trend line? Or are we going to be having a situation where this whole consolidation phase we have seen here since the later part of the New York session yesterday could transition into an uptrend continuation pattern, where the breakout of the structure will be all we need to join or add more positions to our existing trade? So with this information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame. So I will delete these other trend lines, as we want to be using the trend line we identified on the higher time frame as a yardstick to guide our trading decisions going forward. Now, zooming into this current structure, this is where our center of focus is going to be for today. As you will see, after the breakout of that key level, price action has been confined within a range, so we would want to acknowledge this range. So we're still going to do some adjustment here when we bring back our line chart, but for the sake of bring back our candle chart, but for the sake of clarity, let's first of all use our line chart to identify, to acknowledge what is happening here. So we have the 17,770 level, and then we have the support line of this range. Let's put it somewhere around here, which is 17,745. So you want to be marking out these levels accordingly on your chart, as we will be needing them as a reference point to guide our independent trading decision. So let's bring back our candle chart and see if we are spot on this one. So okay, I think we are really spot on here. So we have the 17,770. Okay, 775. Let me use 775. Let me use the median of this range. So we have the 17,775. Okay, and then we have the support line right here. I think 17,745 makes a lot of sense. Or should we use 17,740? I think this makes a lot of sense like this. So we have a beautiful range to guide our trading decisions going forward. Now, you know how we use our ranges. Whenever we identify them, we exercise patience and wait for price action to either break out of the resistance line to buy these assets. And of course, considering the strong bullish momentum in this market, let's talk about the potential of an uptrend continuation. Remember, we've moved our stop losses on this one. Please make sure you have secured your buy position right now. And then at this juncture, it makes a lot of sense to have another buy stop order above the 17,775 level to capitalize on the uptrend continuation. So a breakout of that level will allow this to transition into an uptrend continuation pattern. Then we can join the bullish momentum to the upside. However, if price action breaks down the support line of this range, let me zoom back in. I just needed that arrow there. So if price action breaks down the support line of this range, this might be the beginning of a retracement move, which could be the reflection of profit taking activities. And of course, I will consider that to be a counter trend opportunity. So a breakdown of that structure, well, for me, I will not be taking that position because of the long-term bullish momentum in this market, unless something significant comes out that states otherwise. However, if you are a counter trend trader, a scalper, a day trader who is willing to take such counter trend opportunities or short-term trading opportunities, you might want to position yourself below the 17,745, like the breakdown retest, to join the decline to the downside, and then having your stop loss somewhere around the resistance line of that range, which will be dovetailing to about 30 pips, 35 pips thereabout, if you want to have it way above that resistance line. So at this point, looking at the situation here, we might be having a TP target for that sell position anywhere around the key level at the 17,685, or the ascending trend lines we identified on the higher time frame, dovetailing to a minimum of about 60 pips to a maximum of about 110 pips to capitalize on around this area. So counter trend traders, you might want to capitalize on that opportunity, but for me, I'm looking at the long-term perspective here. So what I will do if price breaks down to 17,745 is to wait and see how the market is going to react to the zone between the 17,685 and this ascending trend line for my next line of action for today. Now, if price comes into this area, counter trend traders who took advantage of this, please move your stop losses, secure this position, as we want to see how market participant will react to that zone. If we see reversal patterns, maybe a head and shoulder pattern, double bottom structure, mark out the neckline, then we want to be joining the uptrend continuation, as price will have respected that ascending trend line one more time, just like it has been doing since the beginning of the year. However, if price gets into this area and we see price maybe drop and break down the ascending trend lines, then this could welcome more selling opportunities. Then at this point, I want to look out for patterns and structures that will support the idea for me to join the downtrend move. So this is how we are going to be managing our trade for today on the USTech100. So basically speaking, our center of focus for today is between the 17,775 level and the 17,745 area, where depending on the direction of the breakout will determine where price is likely going. So let's mark out this level and exercise patience and wait for the structure to mature. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And please take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities today. All right, so I can see man 535, good morning. Quebec, good morning to you. I'm at 36, good morning. Hello Giovanni, good morning to you. All right, so in the absence of no questions, I want to assume that we are all on the same page on this one. So with that being said, we will move on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and after a very choppy start to the week, we finally saw bullish traction evolve from this current market structure, as we saw the Japanese years face some selling pressure following the dovish remark from the Bank of Japan Deputy Governor Uchida Shinchin, I hope I pronounced that correctly, indicating a cautious approach to hiking rates upon ending the negative rates. Now, what this is saying here is that I was able to catch one or two things to hold on to in that regard based on the statement this morning. Now, Eh, Now, the first thing I was able to get here is that the likelihood of the Bank of Japan pivoting from their current ultra loose monetary policy is gradually coming to fruition. And as projected by the Bank of Japan governor a couple of weeks ago, we are looking at between March and April that this will happen. And of course, when this statement came out, it was a glimmer of hope for those who are potentially thinking of buying the Japanese yen to take advantage of the reduced differential between the US interest rate and the Japanese interest rate at that point. And of course, following that statement, we saw some positive traction in favor of the Japanese yen. Now, the deputy governor, based on his speech yesterday, has insinuated that even though they are moving away from the ultra loose monetary policy, that they are not going to be hiking rates. The rate at which they will be hiking the interest rate will be very cautious, and this is not something investors want to hear at all. And this, of course, has resulted in a bearish sentiment against the Japanese yen, resulting in the market participants taking advantage of the speech to capitalize on that uptrend continuation. And if you remember, during our live session yesterday, we did identify a couple of structures here to guide our trading decisions. Remember, it was more of we bought at the beginning of the week, we did not gain too much traction. Then we saw a bearish momentum. We sold below the 148.275, which also did not do very well, giving us an equilibrium to work with ahead of yesterday's New York session. And what we said here to buttress our stance is that we will be using this descending trend line as a yardstick to guide our trading decisions for yesterday. And of course, whenever price remains below the descending trend line, we have no business buying, but we will only buy at the breakout of the trend line. Now, when the trend line was breached, we had structures that we said we will use to capitalize on an uptrend continuation. So we had the 148.275. We added another one at the 148.500, and of course we also added this level here at the 148.825. So presently you should be having a minimum of 3 buy positions running in profit at this particular point in time. And for those of us who don't know, I just added this one this morning after monitoring the structure, which I will be explaining to you in a moment why I've added that one to it. So at this point we have about 80 pips running in profit on the first buy position, while the second one is running with about 55 pips, and the third one right here is running with about 25 pips, giving us approximately 200 pips already on this particular asset. And with this feat, it is high time we moved all our stop losses and secure this current buy position, as we never can tell, anything could happen again today that could change the momentum in this particular market. So anywhere below the 148.825 is reasonable for us to drop, to move all our stop losses to. And please remember that we want to be giving enough breathing space for price action to move around. Now, with the situation we have here, we should also not forget that the Federal Reserve official throughout the last couple of weeks have expressed no urgency in lowering borrowing costs amidst the resilience of the US economy. Now, despite this, markets still anticipate 5 rate cuts throughout the remaining FOMC meeting this year, potentially keeping the US dollar subdued. Now, coupled with expectations for a possible shift in the Bank of Japan's policy stance, this may limit the upside potential for the USDJPY. Hence, it is very important that we ensure that we move our stop losses accordingly as soon as price action just continue to move in our favor, and maintain a short-term trading stance on this particular asset. Now, with the situation we have here and a well-secured position, what is going to be our next line of action? Well, of course, it makes a lot of sense that we continue to look out for buying opportunities here. However, I would like to revisit the daily time frame so we can have an holistic perspective into what is going on here, and for the sake of those who missed out on our earlier editions, to be on the same page with us. Now, looking at the daily time frame here, after considering the character of price action in the last 14 months, that's since the beginning of last year, we saw that price action has been very, very bullish, and of course the appearance of this ascending trend line further buttresses this fact. Now, in addition to the trend line, remember at the beginning of the week we marked out our key level right around the 148.500 area, a level which had played a significant role in determining the direction of price action since the beginning of the month of October of last year. Now, this level right here has added very strong memory for buying power for about 2 to 3 months, as you will see here, before it was finally broken to the downside at the end of the month of November. And remember, we did talk about how that same level was price came back into the structure, and since then price was confined within a range where buyers were finding it difficult to break through the 148.500 level in the last 3 weeks, where we were at the beginning of this week we were considering that if the selling pressure persists, we are looking at selling below the 148.500, and that if price breaks out of the 148.500, this could be a very good opportunity for us to capitalize on an uptrend move. Now, as it is right now, price has finally broken out of the 148.500, but we can't say that this has come to stay yet. Remember, I was talking about the Bank of Japan's policy stance, which the hawkish coming by the Bank of Japan, which could limit the upside, and of course the uncertainty surrounding the timeline of the interest rate cut from the Federal Reserve may limit the upside of this one. So we never can say it's a true breakout yet, because this candle still has about 11 hours for it to close. So we still want to see how far this is going to go. Now, on the 4 hours time frame, we did identify a range. Of course, we saw this range right here where price was confined within the 148.500 and the 148.350 since in the last couple of weeks, and right now that price has broken out of the resistance line, I have no business considering selling at this point in time. The only condition that will make me sell is for price to drop back below the 148.500, a level which is known for strong selling pressure in the last couple of weeks. But if price continues to stay above this level, we will be looking out for more opportunities to buy. Now, in addition to this, we talked about if price remains above that area. Now, the question going into the new week, into today's trading session, is will this momentum continue to the upside, or are we going to have some profit taking activity first happen where it will bring price to retest structure in an attempt to join the uptrend continuation? Now, to capitalize on, to understand this, let's go back down into our 1 hour time frame. So on the 1 hour time frame, I added another level at the 148.920, which happens to be the highest point before this live session began, and I said here that I will be adding more positions, so I placed a buy stop order above that structure this morning. It was a new setup this morning, and I know some of you must have missed on this opportunity, but for those of you who have a basic understanding of our analytical approach in this community, sorry, would have probably capitalized on that move. However, if you are missed out on that opportunity, it's okay. Let's see if the market will give us a second chance to join that uptrend continuation. So will price come back to retest the structure in an attempt to continue the uptrend, or are we going to see a situation where price will break down to incite a sell-off, or will it even come back to retest the 148.500 before it continues up, or retest the trend line we identified at the beginning of the week to continue the uptrend? So at this point, we're at a very crucial juncture right now where, depending on what happens here, will determine what our next line of action will be. But let me reiterate here, we shall continue to maintain a bullish bias as long as price remains above the 148.920. Now, the only condition that will make me sell here is for price to drop below the 148.5. But the fact that price still remains above this descending trend line, let me share this with you quickly. As long as price still remains below the above this descending trend line, I still think that the bullish momentum is still valid, as we could still see price come back and retest to join an uptrend move. But if we look at the distance between here and here, that's about 100 pips. I wouldn't like to risk something like that, so I will just wait and see. Look out for platforms where I will see buy pressure. If it so happens the price retraces into any of this level, I will just exercise patience and wait to look out for double bottom structures, head and shoulder patterns around these levels to join an uptrend move. So on the USDJPY, we maintain a bullish bias on this particular one. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 seconds, because we're already out of time, to see if there are any questions before we move on to the next and final asset on our watch list. All right. So in the absence of no questions, I want to assume we are all on the same page, and in that regard, we shall be moving right into the final asset on our watch list for today. So the final asset on our watch list for today is the XAUUSD, popularly known as the gold spot. This is my favorite asset, and in fact we have a situation in this market where the where price action has been range bound since in the last three days, I think. And in fact, the current bullish momentum that we were projecting is facing resistance as price action shows signs of a potential reversal pattern around this area. Now, if you look at the structure closely, remember we considered buying above the $2,035 level yesterday, and of course we did see price move about 97 pips thereabout before the bearish momentum came in, and I do hope you moved your stop losses accordingly. If you done so, you must have been taken out with a reasonable amount of profit on this one. And like I was saying earlier, this whole consolidation phase is gradually transitioning into what is looking like a reversal pattern. If you look at the last time price tested the lowest point here at the 2015, we saw this impulsive bullish move right all the way up here, got to a barrier around the 2040, drop back down here, then we saw it test a new high for the week at the 2049 at 45 I mean, and then forming a head, and then we saw price come back here again, and then it appears it's going through another high, which may be limited due to this. Look at this nature of this last candle here, closing in the form of a shooting star candle, revealing that sellers are present around this particular area. Now if you look at the pattern, the formation this price action is giving us, it's more like an head and shoulder pattern, which technically is considered to be a reversal pattern. And usually whenever we identify this kind of reversal pattern on our chart, the next thing we want to be doing is to mark out the neckline of that reversal pattern, which interestingly lines up with the 2032 dollar area. Now you know how we do it. We want to see price break down, retest that neckline to validate that reversal pattern we have identified. And a couple of hours ago we saw how price broke down the neckline around this area, which interestingly shares a beautiful confluence with this ascending trend line projected around this area. Now the question going into today's trading session is, will price respect the ascending trend line to incite another wave of bullish momentum just like it did yesterday, or will price action break down the structure to incite a sell-off to the downside? So we are at a crucial juncture in this market where, depending on what happens here, will determine what our next line of action will be. Now the recent bullish potential we're seeing around this area could be taking advantage of the risk on sentiment driven weakness in the US dollar, which of course is responding to the sluggish US Treasury bond yield as at this morning. But how long will this happen? Is it going to last long, or is it just going to be a way of shaking out buyers in this market before price drops to the downside? The US dollar is struggling to attract buyers amidst expectations of an imminent shift in the Fed's policy stance, and this could potentially continue to bolster the prices of gold, as concerns also persist over slowing economic growth in China, who is considered to be the second largest economy in the world. Now traders appear hesitant at this point. Of course, this is very, very clear, as you will see this chopper situation in the last 48 to 6 hours reveals that market participants are hesitant and are opting to wait for the release of US consumer inflation figure, which is coming up next week, to further get new insight into the Fed's future policy decisions and provide a meaningful push on this particular asset. As a result of this understanding, it is very, very important that we understand how market participants are reacting, to understand the psychology behind the price movement, and that will give us an insight into how market participants are thinking about this particular market. And for me, our technical structures goes a long way in telling us this. Now with this situation here, and considering the potential reversal pattern we are seeing here in the form of a head and shoulder pattern, I am of the opinion that we will be looking out for selling opportunity at the breakdown of the $2032 area, which happens to be the neckline of this reversal pattern. So I want to be selling only at the breakdown of this structure. So we already saw a breakdown a couple of hours ago. So if price continues to the downside, we will be selling, and then look out for more selling opportunities at the breakdown of the $2027 area. And in fact, if price action breaks down to 2032, which happens to be the neckline of that reversal pattern, price would also have broken down this ascending trend line as well, giving us signs that buyers may not likely have the chance to push price to the upside. Now, in addition to this reversal setup, also you will see that since price tested this high here had a 2045 area. Since then, buyers have found it difficult to replicate that move and breaking out that structure to find new highs. Now, as a result of this, we have a series of lower highs right here, and let's see if this price will continue to stay below this descending trend line. So to guide our bearish momentum today, we shall be using this descending trend line to do that. So as long as price remains below this descending trend line, we shall feel comfortable in a sell position. And look at what we have here. That descending trend line is just exactly where the neckline is. So let's see how the market will play out from here. However, in as much as we are looking out for selling opportunities at this juncture, we cannot ignore the potentials of buyers, as you will see how this area has been a strong buying niche since the beginning of this week, as you will see here, which is also serving as the neckline of that reversal pattern, which has culminated with this engulfing bullish candle you will see here. Now, for me to consider buying this asset, I would like to see price comfortably sitting above this key level at the 2035 area, and in fact a breakout of this trend line which appears to have happened, and retest of this structure where I want to see considerable buy pressure, maybe evolving into a reversal pattern in the form of a double bottom structure, where the breakout retest of the neckline will be all we need to join an uptrend continuation, and a further breakout of the $2,042 area will welcome buying opportunities. So to get things right here, we are at a very crucial juncture, like I stated earlier. Now, the only condition that will make me buy is for me to see considerable buy pressure, something like this, continued buy pressure, showing signs that sellers are finding it difficult to drop through the neckline and the descending trend line. Then I will mark out a neckline which I will be using to guide my uptrend move. But if this does not happen and price drops below the $2,032 area, we will be back into seller's territory, and I'm of the opinion that it will make quite a lot of sense to sell the XAUUSD at this juncture. So our center of focus for today is basically between the 2035 and the $2,032 area, where depending on how the breakout or breakdown of the structure appear in the next couple of hours will give us an insight into where price is likely going for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decision. And it's on this note I think we have come to the end of today's Extreme Speed Live technical analysis session. And before I round off on today's session, I would like to know if there are any questions whatsoever as regards to what we have discussed so far. So in that regard, I will take the next 10 to 15 seconds off, see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Hello Steamroller, how are you doing today? Good morning, good afternoon, or good evening, depending on what time you are from your current zone. I'm glad to have you around with us today after such a long time. Trust you're doing very well. And you say you're on holidays. All right, great. So trust you're enjoying your holidays over there. I see you, Malela. Good morning. Hope you didn't miss out on the XAUUSD session, because I was seeing you asking a question about the XAUUSD. I hope we were able to sort that answer out for you right there. So in the absence of no further questions, I think we have come to the end of today's Extreme Speed Live technical analysis session, and in fact it has been a wonderful moment with you, as we were able to attend to 4 of the major assets on our watch list for this week, which includes the USOILSPOT, the XAUUSD, USTech100, and of course the USDJPY, which of course, as though we had challenges during the course of the week, as I did mention earlier, that market participants are currently caught in a limbo where we aren't sure what the timeline for the interest rate cut from the Federal Reserve is going to be like for this year, and this has resulted into short-term trading opportunities, which, as reflected on the chart, has choppy market conditions, which did not really give us something significant. But I'm of the opinion that as we gradually get to the end of the week, we will be seeing some beautiful traction. So all we want to be doing is exercise patience so that we can capitalize on these opportunities when they finally happen. So during the course of the session, we were able to identify simple trading setups that we will be using to guide our trading decisions, and I do hope you marked out these levels accordingly as we illustrated. If you have done so, well done to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that while we make our decisions, every plan and decisions we make in the financial market is more or less an educated guess. And as a result of this understanding, you want to be having a well-defined risk management strategy in place to ensure that you mitigate against any risk that may come up if price action goes against our direction. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed. If you did, you sure want to be part of our subsequent editions as we come here again tomorrow to review how well these assets have been doing, and of course prepare for tomorrow's trading session, which happens to be the last trading day of the week. And I'm of the opinion that we are likely going to be seeing some more beautiful tractions tomorrow. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered in this community to make your own independent trading decisions. So once again, I'm glad to have you around, and I look forward to seeing more of you. Same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and prepare for the last trading day of the week. So on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.